Eric Muathe with Muathe.com with world market analysis for the weekend of September 17th and September 18th, 2016. Let's take a look at markets here. We begin by taking a look at how Asian markets closed as of Friday. And we see a mixed picture. Japan was up, China was down, almost 0.6, 0.5 up or down. And we can see other markets were up. Australia was up about 1%. Take a look at the European markets at the close of Friday's session. And we have pretty much, let's call it, down session. On average, about 0.9% on average, down on Friday's session. Take a look at the Americas with about 2 hours to go before the close of Friday's session. And we are looking at markets, let's call it down as far as Brazil, Canada are concerned. And with about 2 hours to go, we can see the US market slightly down on Friday. 2 hours before the close, we see that crude oil is down the most, down about 2%. Let's take a look at those charts. Now, the one takeaway from this video that I would like to share with you is that because monthly charts, for the most part, are pointing down, and this is the key in my opinion, because the monthly charts continue to be pointing down, net, this market or world markets are generally pointing down. And that's the takeaway from this video. Otherwise, some other time frames are holding support. But for the most part, if your markets are down for the month, expect the pressure to be to the downside. Again, let's begin here by taking a look at the Australian market, which has been down on the weekly chart for some time. And we can see ever since this failed breakout attempt here, once that breakout failed, this market has been down. As we always say, failed breakouts are notorious for taking markets lower. Keep in mind, this corresponds very nicely with the previous analysis that we had come back to test the break level on the RSI. Once the RSI broke down here, it came back to test this. In fact, it's done so twice here for resistance here before a slight pullback. And over the last couple of weeks, we tried to move above the red line but were rejected. And since then, of course, we've drifted lower. In fact, this is one of the markets that looks like it is trending lower in terms of its monthly chart setup. And on the monthly chart for the Australian market, the risk is as it moves below 50, the more it stays below RSI 50, the more you open the possibility for a big down month. The last time it dropped below 50 here was late December, early January for this big drop. And right now the risk is if it continues trading lower on the monthly chart, expect a continued movement to the downside. Also, I believe this chart is very representative of what could happen in other markets, because if you take a look at the break of the RSI off the highs of 2015, the market has come back to test that same level, and you can see this has turned into resistance, which is a sell signal, and of course the market has been responding since then. If you take a look at a longer picture for the Australian market, it gives a good template for what could happen worldwide. RSI topside resistance coming into play. That's not good. And also coming off the break level here. This break level, of course, is just the same level we discussed, which was the break off the highs of 2015, coming back and being tested and failing. So you take all that into consideration and you can see that this is not a good setup. Month to month, as long as it's down for the month, expect much lower prices. And again, I've spent some time on the Australian market because I believe it is a good classic example of what could happen to world markets as long as world markets are negative for the month of September. Take a look at the Chinese market, and we're going to draw a simple line that we drew over the last couple of weeks. This line here, in my opinion, has been instrumental in telling us what to expect. Here we had the break of that trend. We moved off the highs here, and since then this has become resistance during these two highs, and over the last couple of weeks the market has come back, hit that level on multiple occasions and pull back. So all these have led to pullbacks. So this market continues to be suspect until it can move above this line here, which has been resistance. Also, we need to see whether we can break out at some point above the recent weekly closing high for 2016, or recent months actually. So if one wants to go long, they might want to insist that it is breaking out, and the level to watch there for a breakout is 3108.10. Anything above that would be bullish. For now, this market continues to point down. This is not the only market showing backtest failure on the weekly RSI, because if you take a look at a 5-year weekly chart for the Japanese market, you can see that this was a line of support when the market was trending higher. So we extend that line, and we can again see that over the last couple of weeks the market's been failing. Every time it tries to move above that line, it's been smacked down. So as long as this resistance continues to be showing up on the weekly chart, we can net assume that this market is still suspect and should be under pressure in the time being. Sticking with the long-term weekly chart, take a look at the Nifty. We can see here also backtest failure over the last couple of weeks, going back to this trend line, going back to 2011. And it too shows that we hit this level twice and we are stalling since then. So here and here, and this is ever since the break off the highs. The same trend line is coming into play with double top resistance, which might not be good as we move forward. Also keep in mind, this action here by itself is bearish. Why? Because we've been rejected twice when trying to move above 69.1. It's not a good sign. Also, take a look at this weekly breakout attempt. For now, it has failed. Again, that's not a good sign long term. And again, this is trying to move above the previous 2015 weekly closing high. Right now, the attempt not looking good. Market hit that level, did not close above it, and now 1 week below that. Also, there's another layer of resistance, which goes back to this break, this trend line break of the RSI. So this trend line break here brought the market off the highs. The break brought the market off the highs. We dropped, of course, lower since then, coming back to test those levels, and we can draw a line from there. As of right now, we've hit that level twice over the last couple of weeks, and each time the market has pulled back. So we can say that is double top rejection on that red line, which is not a good sign by itself. And now if we zoom in to a 2-year weekly for the Nifty, we can see that the level it needs to be trading above to break out on the weekly chart is 8937.75. As of right now, this is not working out. The bulls have been unable to move above that, so this becomes a suspect market until we can clear that resistance. We can also see that on the monthly chart, we need to break out above 2015's monthly closing high if this market is truly going to move higher. The level to watch here, and the level we've been watching, is 8844.60. Failure to move above that is not bullish, of course, and a breakout above that level would be bullish. Right now we are seeing a failure as of right now, so we have to assume that the market still has a lot of work to do to prove itself. Otherwise, the more it fails to break out, the more it's gonna be pushed lower. And the key for the market here is, as long as the market is down for the month, that's bearish. If it can be positive, which would bring it closer to the breakout level, that's good. So a down month is bearish. Anything positive and above the previous 2015 monthly closing high would be very bullish. One should not expect the Nifty to drop until it can break below this trend line. Coming back over the last two or 3 days, finding support there on the daily is good. Keep in mind, it is acting as it should for a good uptrend, bouncing off RSI 50 on the daily and consistently moving higher. So all these have been good support at the 50 RSI level, which is good. And also over the last couple of weeks, we've come here, we bounced, and again here. So until the market can break below that line and also move below 50, one has to assume that day to day the market continues to be stable. If we take a look at the South African market, we can see that it also failed to break out over the last 3 months. So failed to close above 2015's monthly closing high, which remains a negative. And also the attempt to break out came with declining strength. In other words, this breakout attempt came with the RSI failing to move above 61.8. By itself, this chart is very bearish. Take a look at the French market. Just want to point out one observation here, and it is that this trend line needs to hold. Otherwise, a break of this monthly lows trend line on the RSI, anything below that would absolutely take this market lower. So we need to watch for that. A break of that, one can expect a major drop. And keep in mind that would also coincide with the RSI moving to 3-year lows, which would be very bearish. So watch that, because a break would actually suggest that we are going to see a significant drop as far as European markets are concerned. If that does not hold, might not be a good picture in the coming months. If we take a look at the German market, the DAX has come back over the last couple of weeks to this previous break of the highs of 2015. The RSI was testing that break level, and as you can see, we hit that twice and failed. So the pullback over the last couple of weeks is consistent with what we've been watching here, resistance on the weekly chart. If we take a look at the FTSE long-term monthly chart, we can see a couple of lines, all of them pointing to resistance. The first one is a topside RSI resistance on the monthly coming into play. That is showing rejection. It's not a good sign. Take a look at the other backtest line coming off the lows of late 08, early 09, extended out. You can see that it is still showing resistance as of right now. And keep in mind that we had broken below that level here of the highs. We haven't been back to that level. And there's another third line which is off the break of this trend line. Since that break, we can draw a line from here, and we see that the market has hit that level on a couple of occasions. Double top here for the actual highs in 2015, and now coming back in 2016, hitting the same level. So those three lines point to a market that is under pressure unless it can move above those three lines. Just like the Nifty, one should not expect this market to drop immediately until such a time as when it breaks below this RSI line of support on the daily. This line connects recent lows on the daily RSI going back to August of 2015, and recently we hit this level over the last 3-4 days. So until we are below this line, one can assume that day to day the market continues to be stable. There's also another line coming off the lows here. The RSI moved out of this range here, and since then this has been support short term on a daily chart. You can see that we held here for the short term lows there. The market did move higher slightly, and again we held that same level here for the lows there, and we touched that green line for the lows there, and over the last couple of days we've hit that level. So until those two lines have been violated to the downside, day to day this market continues to be stable, with the risk of breaking below those two lines and heading lower due to the weight of the monthly chart. Take a look at the Canadian market. Still continues to show that it is coming back and is failing on the monthly chart to hold above this line. This was the previous break level of the highs here, and now coming back in 2016 we hit that level on the monthly. As long as the monthly chart is down, one can expect monthly pressure to continue putting some negative slant to the market here. So this monthly chart doesn't look good for now. It's a down market. And also take a look at the Brazilian market, and we are using the ETF, the EWZ. And again, the same type of analysis. We got topside RSI resistance coming into play here, and also the break line coming off this break in 2011. We've been watching this level, and as of right now, with the monthly chart down for the month, let me draw it a little bit lower than that. Anyways, draw it somewhere around there. You can see that this has been resistance once before for the Brazilian market off the highs there of 2014, and here we are seeing that it was unable to even get to that level. So this remains a chart to watch, because as long as it's down for the month, as I've been saying, and the theme for this weekend's analysis is, as long as your markets are down for the month, we should expect that, generally speaking, the pressures for world markets are going to remain down, since most world markets are negative for the month of September. Eric Mother, mother.com. As always, subscribers, be on the lookout for part 2 of this weekend's market analysis video. We should have some stock ideas, and also check out my free part 1 US market analysis. Eric Mother once more. Good luck. Enjoy your weekend. I am out. Woo! Yeah. Woo! Eric Mother, mother.com. It is September. What's September? No, it's not supposed to be September. Oh. Okay, take 2.